Good morning, my name is Ryan Littlestone from forexflow.live. Here we are in one hell of a week that's coming up. Lots of big events going on this week. It's one of those weeks where we look at the list of things coming up and want to go straight back to bed. We've got everything from, obviously, the US election is the top of the billing, but we've got central banks, we've got the RBA, we've got the Bank of England, we've got the Fed, we've got non-farm payrolls, we've got continuing Brexit talks, we've got the virus continuing to cause restrictions across the UK and in Europe. So really, huge events coming up this week. And as traders, what we have to do is we have to match that off against the risk. Trading is all about managing your risk. So what I tend to do in these situations is look and see, right, is there too much risk for me to trade? Is there far too many possible outcomes that can happen this week? And that plays into my trading. That reflects on my trading, whether I get out of certain assets, get into certain assets, whether I just sit back and let all the events pass and pick it up after. So that's pretty much what I'm intending to do this week. But as I say, the election is probably the biggest thing to look for. And I'm not going to get into the estimates of what's going to happen, the analysis of what's going to happen. We've heard of blue waves, red waves, hair waves. It's just going to be a big wave of different outcomes. There's so much that can happen in this election from a trading standpoint, from a volatility standpoint, a risk standpoint. It's not particularly something I want to get into. So what I tend to do in these situations is just take a step back and I look at try and keep a simple view of it. So one thing I'm going to look at is, for particularly the election, is US 10-year yields in general, but particularly US 10-year yields. Because in my mind, they're going to give the proper clue, the proper outcome, or the market's view of what happens in the elections, whether it's a Trump win, whether it's a Biden win, whether it's a contested election. The yields and the US bond market tends to be the main driver in these events, and that can drive Forex, that can drive stocks, but it all can start with bonds. So this is what I'm going to look at. And if we look at the chart here, we've got a daily chart for 10-year bond yields. We can see that since the virus plays come out and all the central bank action, we've been below 1% in yield, but we've been mooching around sort of between the 0.5% and 1%. So what I'm going to be looking for here is depending on how things go, is whether we get back above that 1%. You're going to see probably one of two things. You're either going to see the safe haven flows move out, or you're going to see them come back in. So that's going to push the dollar, and from there on, it's potentially going to reverberate to other assets. So in simple terms, whatever happens, if we see these bond yields pushing up above the 1% mark, that's going to suggest that perhaps some of the safe haven money is coming in, and that the economy is potentially going to pick up under whoever's president again, and that's going to potentially pull into the dollar and see potential dollar strength. On the flip side, depending on how it goes, if those bond yields collapse back down, that's going to indicate possibly that Trump's in play, possibly that the Fed are going to look to do more if we have to get into more virus containment from a monetary perspective. And we could see those bond yields dipping and the dollar's going to be dipping as well. So lots to happen this week. As I say, it's hard to pick a trade. The risks are two-way, they're twofold. We can see a big move up in the dollar, a big move down in the dollar. But as I say, these bond yields are pretty much where we're going to get the best indication of how the market is going to be seeing the results of this election. For all the other assets, for me, it's going to be a case of letting the dust die down from the election and then seeing if we're going to get back to the other fundamental drivers that are in play. And that will be the Bank of England perhaps moving in QE in their monetary policy to combat or to provide the support for these latest virus lockdowns. Then we've got the FOMC. Are they going to be quick to move based on the election? So that's what we're looking for this week. Very busy, and as always, I wish you luck.